Hello and welcome to another update video about gold. We take a look here at the 1 hour time frame at the moment. In the last video, I also explained to you the bigger picture, the larger time frame. Here, however, I think it makes sense at the moment only to take a look at the shorter time frame because bigger picture wise, nothing happened. But what I want to share with you also because there will be new viewers, the assumption is currently that we are in a bullish market for gold. That a wave 2 bottomed here around the 6th of October. Yeah, in October, early October, we formed a wave 2 low, which means a correction completed there, and we could now indeed be in this third wave rally. What I have to say about this is that the third wave is part of an ending diagonal, which means these sub waves are ABC structures because we're in an overall fifth wave. And also after strong rallies, and we had a rally into the November highs. After a strong rallies, especially in the metals market, we typically have to expect very, very long and boring sideways action. And again, that's what we've seen here, and that's what we currently have to deal with, what we experience. It's extremely boring. Sideways action typically in crypto as well as in the metals market. So they are very similar. The corrections are extremely draining and take a long time. So we have to mentally always prepare for that when we enter corrections, and it just takes long. Okay, so that's just something I wanted to make sure is clear. The idea is that in this third wave, an A wave completed. Okay, you can count this as a 5-wave move up, but I think it looks very good as a 3-wave move. The move down here is currently also a sideways move. It could turn into a triangle or something, but the assumption is that this here was now within a B wave, yeah? That the A wave is complete, the B wave completed. We're now in the C wave down as an ending diagonal to complete a larger B wave, possibly in the area around 1930, maybe a little higher. And then a C wave up should start and take us to 2400 and beyond. Yeah, and let's take a look at the detailed count. The market has respected all 3 of these short trade areas or resistance areas. Now, if you use them for short trades, that's up to you. But the market recently, since it was actually not the November high, it was the December high, the market dropped in what I consider is an A wave. We rallied in a very clear 3-wave move, so we can recognize the waves at the moment really well on the smaller time frames. That's also why these resistance areas were all respected. So 3 waves up into resistance, respected the golden ratio there. Then what I consider a wave 1 to the downside, but it's wave 1 of wave C. It's very choppy, it's not impulsive, so I'm leaning to the idea that this is an ending diagonal. We have a wave 2 as a flat pattern here, respected again our resistance area, and now we're likely in the third wave to the downside. Now, this move down that started on the 12th of January, that's not all of wave 3. It has to be an A wave down, a B wave rally that I shared with you, and it reacted again to the resistance area, to the latest one, between 2036 and 2054. Again, the move down doesn't look impulsive, so it's possible the B wave has topped. Could still stretch a little higher if it needs to, absolutely, yeah. So, but above 2054, probably something different is going on. But until then, I assume that, obviously we have to give it that space. But until then, I assume that we're now in the C wave down, wave C of 3. Then we should get a 4 and a 5. And looking at the proportions, we're going to take the length of the wave A and then compare it to the length of the wave C. We get the 100% extension level. That's a key target for a C wave in any correction. And it points towards 1936. I think it fits quite well with the micro count. But if we now break above 2054, then it will deviate from the primary scenario. What would happen then? I mean, I shared that with you in previous videos. The assumption would then be that simply the B wave is extending. I don't see it at the moment as very likely that the entire correction is over. What I see as potentially very likely is that the B wave is extending and only the C wave will start later. But for now, we assume that the B wave topped already here around the 28th of December, and the C wave down is unfolding, but it's unfolding as an ending diagonal. So again, it's not impulsive. So we just have to be prepared for potential micro count changes. They are relevant in diagonals because we're dealing with corrective subwave structures frequently. Yeah, that's my update about gold. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500 as well as regular updates about stocks, then check out the Stocks and S&P 500 service. You'll find a link in the description. Thanks a lot for watching. Bye-bye.